The Reserve Bank have now cut their interest rates to 3.25% as the basis rate. That is a 0.25% of a percentage cut. It's the lowest in 3 years. John Stanfield is the General Manager of the Horizon Credit Union and joins us now. G'day, John. How are you going?
I'm well, thank you, Nick.
Surprise for you or to be expected?
Oh, look, I think it's a slight surprise on this one, but I think the Reserve Bank was likely to go, if not this month, they were probably going to go November anyway. So in the grander scheme of things, probably not a lot of surprise in this one.
What are you seeing as factors around the world that led to this and the fact that you weren't surprised?
The big change for the Reserve Bank, I think, from a month or two ago has been China, really. Europe and North America haven't really changed much during that time, but what has changed is that China does appear to have come off the boil somewhat, and as we all know, a big flow-on effect for Australia through our demand for commodities coming through. And I think that's probably the one thing that was cited in the Reserve Bank minutes that probably led to this decision.
Okay, how do you know that China's come off the boil? Because their flow of information is not necessarily as free as it is from Australia, for instance. Is it all about the demand for our commodities?
Look, I think they do release statistics about their GDP numbers, and I think that's the main one, and their GDP numbers are still amazingly high by world standards. We're talking 6, 7, 8% as against our 2, 3, 4 and even lower in some of the other developed countries. But it is coming off this very high base, and it's that slowdown, it's the peaking of the demand for the commodities, which we thought was probably going to go on for another 2 or 3 years. But the Reserve Bank's now thinking, look, this might be actually peaking through 2012-13.
So they've gone from unbelievable, just ridiculous, to still outstandingly high.
I think that's a fair summary, yeah.
And any slowdown, as I mentioned in my introduction, economists see any kind of slowdown as bad news.
Well, look, as an economist myself, I don't know if I can agree with all that.
Oh, have I defamed you and all of your friends?
No, not at all. Look, I think the people in the markets are always trying to look for the negative side as well as the positive. And You're right that lower interest rates are an indication that the Reserve Bank is looking to stimulate the economy.
It seems to have had a fairly quick effect on the Australian market, at least as far as the dollar's concerned. Is that what the Reserve Bank were attempting to do, basically?
Well, they wouldn't admit as much, I don't think, Nick, but look, I think most people do agree the Australian dollar is higher than we would want for our own competitiveness in the global arena. 0.25% is probably not going to change the dollar a lot, and we've seen it come off around about a cent over the last 24 hours. But look, the problem that Australia's got in terms of the dollar is that we're still seen as a very safe haven for international assets. Pension funds all around the world are seeing an economy which is still performing very well. Inflation is very low, unemployment is low. It is seen as one of the few places in the world that is seen as a safe place to park their money.
That's interesting. So pension funds, I mean, just as an example, are buying Australian dollars. Investing in Australia, therefore the demand for the dollar is high, so that's why the rate is so high.
That's exactly it, and they may be buying Australian dollars or they may be buying Australian assets, but to buy those Australian assets, they will need to get Australian dollars.
Okay, interesting. So that's the international scene. What about the local scene in Australia? What sort of factors in the local scene, lead you and your colleagues on the bank to consider your own interest rate?
Yeah, well, for Horizon Credit Union.
For the credit union, beg your pardon.
Yeah. Look, we'll be looking as always to balance the interests of the depositors and the borrowers through this process, and we'll go through that standard process as to what cut gets passed on, and certainly will be the majority of it, if not all of it. But look, we've had the discussion before about the impacts of the lower interest rates. Also, don't just they help the borrowers, of course, but they're starting to bite the depositors as well, and that's one of the things that we need to balance the interests of the depositors and the borrowers through this process as well.
I know when you hear statements from the big banks, they say the cost of borrowing has gone up, so it's not an automatic lowering of interest rates or raising of interest rates. Is that still a fact?
I think it's the impact of the high cost of funds has come off a little, certainly in what we call the wholesale markets, or where the banks are borrowing from other banks, as opposed to what we call the retail markets, where we're borrowing off the mums and dads in the street. So, as we've seen a bit more liquidity come through in global wholesale markets, it reduces the pressure to pay high interest rates to the mums and dads. So I think that's one thing that probably has changed a little in the last 3 months, and hopefully one of the factors that will see the major banks pass on, if not all, certainly the vast majority of the RBA cut.
Okay. And what sort of timeline do you give yourselves to make the decision?
Well, it's always been our standard process, whether rates are going up or down, that we apply them from the first of the following month. So, we'll be running through over the next week or two, making our decision and putting that out. But we certainly do that completely independent of what the other banks are doing. We'll make our own minds up and we go through that process.
So you don't look at what the other banks are doing? I mean, it's a competitive market and you're in the business of selling a product at a certain price. You must look at what they're all doing.
Well, we know where we stand compared to them, and look at anybody can go online and have a look how the interest rates of credit unions and mutual building societies compare to the majors, and certainly in lending rates now, it's a very large differential between the two of them. So we keep an eye on them, but we're a mutual, we're owned by our members, we do what's best for our members. That's our reason for being.
All right. John, great to talk to you. Thank you.
Thanks, Nick.
John Stanfield's the General Manager of Horizon Credit Union. You're with Nick Reinberg at 97.3.